Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and this is the Forex market outlook for the week of January the 18th, 2010. Now, we do have a holiday short week next week with Martin Luther King Day on Monday. However, I think we're still going to see some pretty good action in the Forex market. So to start this week's presentation, we're going to start off where we always do at the US dollar index. Very key reversal has taken place here. We can see that we've closed at 77.32 on the DXY on the US dollar index. It's closed above the 18-day predicted moving average. We have the 3-day crossing over the 8-day and the 18-day. However, we can see here that the 8-day predicted moving average from Vantage Point is riding parallel to the 18-day predicted moving average, which is our key level of support. Now, the break back above this area is a very could be considered a very bullish move. So it's certainly something we have to watch for at the beginning of the week to see if we can stay above this 77.19 area, which would then see the US dollar index begin to recover and continue its move higher, likely towards that 80-81 area. But again, that's left to be seen. We've got a very volatile week ahead. Even though we have very little economic data, we still do have this dollar index leading the direction of the Euro US, the US Japan, Great Britain US, all of those currency pairs that are affected by that index. So again, to start the week, we do appear to have somewhat of a bullish signal again on the US dollar. Key thing to point out here, Vantage Point is very, very reluctant to put out a sell signal on the US dollar. We will only get that sell signal once we have the 8-day crossing over the 18-day along with the 3-day. Much like we had here about 6-7 weeks ago, the end of November, we had this buy signal on the US dollar index, and we can see how that turned out. Very, very good move. So we'll be watching the US dollar index very closely, and I'm sure I'll be touching on it both Monday and Tuesday on those weekly presentations. Now, going into our commodities that we're watching very closely, how they correlate to the Forex market, we're going to start with Brent crude oil. We can see here that we've got a bullish or a bearish reversal on oil, excuse me. We've got the 3-day crossing over the 8-day and the 18-day predicted moving average. We've closed at 77.11, which is well below the 18-day predicted moving average from Vantage Point at 78.28. Now, important to note here that predominantly with the US dollar gaining strength, crude oil normally sells off. Now, we've had this bullish move that's happened about the end of December that's drove the crude oil prices higher. That's been very good. Now we're starting to see a reversal signal here. A weekly close at 77.11 certainly points to further weakness in crude oil. However, again, we'll have to watch the dollar index, the other commodities very closely to see if this can gain any momentum or if this is simply a corrective move in the overall uptrend in the crude. Now, looking at gold contracts, we can see that it's starting to run a little bit flat. However, we do have a buy signal. We've closed the week a little soft, 1130.50. However, it's still above the 18-day predicted moving average, which a slight bullish bias still on gold. However, once again, we'll be watching the US dollar to see if that can continue, the momentum in the dollar can continue to gain strength. That certainly doesn't mean that gold is going to move lower, as I've pointed out in each one of my weekly updates, that last year at this time, gold contracts and the US dollar index moved higher together for a period of about 3 to 4 months. We're looking for that to continue again this year, but again, we'll be watching it very closely. So with that said, we're going to now go into our major foreign exchange pairs. We're going to start this week with the US CAD. Now, US Canada has been moving down aggressively. We can see on our indicators on the predicted TSI, the predicted MACD, and the predicted RSI all heavily oversold. A corrective move higher here is extremely likely. We've closed at 102.90. 103.90, 103.23, and 102.86 are our key levels of resistance. What we need here to get this thing moving is a sustained break of the 103.90 area. Now, that may be a tall order in these markets. However, the US Canadian pair is largely driven by crude oil prices. So if crude oil prices continue to move lower, the US CAD will move higher. There's certainly no economic data coming out of Canada that supports a further strength in the Canadian dollar. However, if the crude contracts move higher, US Canada will also move lower. So very important to remember that if you're trading this, to watch the oil very carefully. Now, going into our next pair, we're going to have a look at the US Swiss franc, or the Euro Swiss franc, excuse me. We can see here the reason why I'm going to talk on this one, even though it's not a major. I do consider it to be a major. We've got this sell signal, this very strong sell signal from Vantage Point off the 151 area. We can see that it's now moved aggressively lower, all the way down to the 147 level. We've closed the week 147.65. Again, very important to point out here that the predicted TSI from Vantage Point is running flat in heavily oversold territory. We now on the predicted MACD have a crossover on the trigger in oversold territory, suggesting that Euro Swiss franc is going to move higher. So there's a good opportunity to get in here on buys. Even though our triple EMA crossover is still pointing to the downside, our early warning signals are starting to roll over long. So anywhere between 147 and 147.50, we're going to be looking to get into buy positions, and I would expect to move back to at least the 18-day predicted moving average at Vantage Point at 148.45. So again, we'll be looking at counter trend longs on this one, anywhere near the predicted low of the day, or again, to narrow it down, between 147 and 147.50 is a good area for longs on that one. Now, going into the US-Japan currency pair, we've got definitely have some volatility here. However, we also have some very good support in the 90-50 area. We have the 3-day crossing over the 8-day and the 18-day predicted moving average, but the 8-day has not yet crossed the 18-day predicted moving average. So our buy signal US-Japan, remaining long on US-Japan right now is probably the best idea, but we would expect volatility. We can see that we have 4 candlesticks down here off this 90-70, 90-50 area. Now we've closed at 90.86. I expect some volatility on Sunday night, probably pushing this down to retest this area. If we get a sustained break of the 90-20 area, then US-Japan is likely to reverse and start moving much lower. At this point in time, I'm not convinced that that's going to happen. I think we're going to see further US dollar strength. However, if risk aversion comes back into play and things like that, then the dollar yen will very quickly move lower. Now we can see in the crosses this week that the crosses